Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, November 18th, 2022. Before I jump into the charts, just want to encourage you to please click like if you haven't already. That does help us out a great deal with the YouTube algorithms and being found on YouTube when people are searching for Tesla or Apple analysis. We're putting both reports out every single day for free on Wicked Stocks. And subscribe if you haven't. Please subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. At least 2 reports a day. This week we also, did an NVIDIA analysis that you might appreciate. And share the material if you would, the videos themselves with friends or colleagues. Let's jump into the charts. Just a reminder, on the weekly chart, we've got a band of channel support at 171.52 to 179.63 all week long. And on the daily chart, you can find the same at 170.69 to 179.09. So that is our big area for the day. And actually through the rest of the year and even through the first quarter. We tested it last week. We're reapproaching it again now. It can absorb selling longer term. So when we dip into the 170s right now, this becomes bottom picking territory, whether that means investing in Tesla, the stock itself, as we move into later year, whether it means buying 215 out of the money calls that don't expire for a couple of weeks at least, because I think that is likely, this descending channel top at 217.86 over the next couple of weeks, or 240, 250 out of the money calls that don't expire for at least 2 to 3 months, because I think 251.81 is in reach inside of 2 months. And so that is really sort of the big picture right now. Let's talk. So all the minor points have been carefully chosen, and assuming we hold above the 170s support, we can turn higher. Even on an intraday basis, we can rally up to 192.17. That is a former short-term channel bottom. I have as an intraday resistance level. Now, we are an appreciable distance from it. It may contain daily highs. If we push through 192.17, I don't think we're going to reach 202.71 today, but I can show you what 202.71 is. It is our new upward pivot point into later next week. And I don't expect to see this level. If we do close above 192.17, the level I just showed you a moment ago, I do think 202.71 is likely Monday or Tuesday of next week. And this short-term channel top, well suited to contain daily buying pressures and possibly into later next week. This could be considered a 2-star resistance. In other words, able to contain 2 to 3 day highs perhaps. But having tested and still testing 170's long-term support, I wouldn't encourage aggressive selling here. A mere settlement above 202.71 should yield this targeted 217.86 within just another 2 to 3 days, where once again we can top out on a weekly basis, possibly into early December, fall off from there again within a couple, 2-3 weeks of testing 217.86 back into the 170s. And it would be a settlement above 217.86 that would then indicate the speed line that is presently at 251.81 within another week or two. I will say this: if we're testing the 170s, and let's say you're going a little long, or maybe you don't go long at all because it's a heavy market. We're at new lows, and you're just not into buying a weak market. You want to buy on strength. That maybe you're a longer term investor or a longer term position trader. Maybe your positions are 3 to 5 weeks or something. I will say that closing above 217.86 is the first sign that that this support area is working on a longer term basis. And so you could consider going long, the longer haul above 217.86. Yes, this area would be in reach within a week or two and we could fall off of it, but we could also close above 251.81 on the first attempt in testing it, which would actually signal longer-term bullish continuation. I will once again remind you that, and I don't have it here. So I don't. Oh, here we are. Yeah. There we are. These are the channel tops. So holding above the 170s that we're in the midst of testing still will keep the lower half of the 300 region in reach. over the next 3 to 5 months, half year or so. That could be in the second quarter quite easily of next year. So I just want to remind you of that we can easily bottom out here. There's also a long-term 5/8 Fibonacci off that March 2020 COVID low. That's a significant support in its own right, smack dab in the middle of this 170.69 to 179.09 region. So I think I've said enough. I think I've reminded enough that we are in bottom picking territory, but
just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below.
if we were to close today below 170.69, we'd have a sell signal on a number of counts. On the weekly chart, below the Fibonacci I just showed, below the channel bottom on the weekly chart, obviously below the channel bottom on the daily chart, and within 2 to 3 weeks, I would expect this 137.71 sharply descending channel bottom, and within 3 to 5 weeks, I've been mentioning how this set of channel structures would be in reach. So closing below, and you could also just, this is a good visual reminder, closing below 172.94, 170.69 for sure. This channel structure would become our next 3 to 5 week objective. We could get down there in 2 to 3 weeks where we could bottom out on a monthly basis, perhaps longer. But quite honestly, as I've been saying, if we were to close below those descending channel structures and this Fibonacci and really a neckline of a very long-term head and shoulders formation, you cannot discount the possibility that this thing will unravel all the way back to A, which is I think $28.36 a share. Now I know that is laughable in some circles, and maybe it is. I'm just going by what the charts are telling me. I've been doing this a long time, and in the commodity markets, you know, if this were the corn futures, let's say, I would be pointing to A if we closed below that low 170 support. I'd be pointing to it as a potential long-term objective. So no good reason to be long Tesla through the rest of the year and into the first quarter, in my opinion. If we close today, the week itself, below 170.69. I think that pretty much rounds it out for Friday's Daily Tesla Report. Please click like and subscribe each and every time. I do appreciate you watching. And please share the content, if you would, with friends and colleagues. And don't forget to subscribe. You have a great weekend.